In the bank credit system, money is not actually lent. It's created by the borrower as credit towards demand for the borrower's future production, just as this movie is proposing. But the system pretends it's a loan of money, and repayment must be in money. The borrower is required to earn both the principal plus the interest in money within a limited time. The alternative is to create credit money directly and simply spend it into existence in the process of production. Like bank credit, this is credit towards the demand for future production to be honored within a limited time. But the credits spent in this system are obligations to be fulfilled with products or services only. There is no debt of money. Full recycling is naturally enforced by the system itself. The money created to produce something must equal the money needed to buy it when it's ready for sale. If this seems novel and strange, that's because the words used in banking have conditioned us to believe that banks lend money. In truth, we self-issue credit now by signing the loan document and pledging our future productivity to repay the so-called loan. Our promise of repayment in money is what creates the money. And most of us will have to earn the money we repay by producing real goods and services of value to our fellow humans, just as if we had issued our credit directly. In our current system, the bank doesn't actually have the money it creates for us. The bank does, however, validate our self-issued credit by undertaking to lose the amount created if the loan is not repaid. This is called an unfunded liability, a fancy term for gambling money you don't have. Thus, our personal credit becomes both the bank's source of income as interest and also a potential loss to the bank. As the bank increases its income, it also increases its potential losses, which it knows it cannot cover. As banks are only required to own assets that cover 4 to 8% of their potential losses, losses more than that will put the bank out of business and require deposit insurance to bail out the failed bank's depositors. Like the banks themselves, the deposit insurance can only cover a small proportion of its potential losses, so the burden of saving the system eventually falls on the general taxpayer, the only one who can be compelled by law to take on the bank's gambling losses. The public as a whole must go into debt to create the new money needed to make up for the private liabilities that were unfunded in the first place. We can go on endlessly about the numbers and who did what, completely missing the point. The problem arises because we are enmeshed in imaginary numbers generated by an inhuman, unnatural, and ill-designed system which has become completely divorced from reality.